The week's end top stories at NBR: ACT's policy of differentiating between China and the liberal democracies, milk processor SYNLAIT agrees to an extension of debt facilities, construction sector confidence issues and finding skilled workers, and there's more coming right up. Kia ora and welcome to NBR This Week. We start with a wrap of the end of the week's top business stories from the authority in New Zealand business news since 1970, nbr.co.nz. Then we'll take a look back at the top NBR Today stories for the past week. I'm Paul Brennan. Thank you so much for joining us. Hopes that a white paper released today by the Institute of Directors New Zealand and law firm Minter Ellison Rudd Watts will stimulate robust debate around so-called shareholder primacy and stakeholder interests. Joining the NBR's Nicola Shepherd was Minter Ellison Rudd Watts partner Silvana Skinoni.
We believe that the company actually needs to be sustainable, needs to be long-term successful. And that means you look at other things. You look at the environment, the government relationships. Your customers fundamentally need to be happy with the company. And that's why we think that best interests of the company is not synonymous to shareholder profitability.
Minter Ellison Rudd Watts partner Silvana Skinoni speaking to Nicola Shepherd there. The ACT Party's plan to shut China out of its proposal to loosen overseas investment rules for investors from OECD countries seems doomed from the outset. New Zealand International Business Forum Executive Director Stephen Jacoby said if screening was removed for investors from OECD countries, they would also have to be removed for Chinese investors under the conditions of New Zealand's free trade agreement with China. Not only that, but investment rules with countries in New Zealand's other free trade agreements would also have to be relaxed. Jacoby suggested that ACT, if it did find itself part of the next government, would be unlikely to follow through with the policy of differentiating between China and the liberal democracies of the OECD when it came to investment. Milk processor SYNLAIT has agreed an extension of debt facilities and new banking covenants for lending due to mature in September and October this year. The company has also disclosed new banking covenants, including a requirement for minimum shareholder funds of $600 million. As of January this year, shareholder funds were $830 million. In a statement to the NZX, SYNLAIT said its $250 million working capital facility, maturing on September 30, had been extended to October 1st, 2022, and included a temporary increase to $330 million until February next year. The auditor, embroiled in the FUJI XEROX accounting scandal, continued its name suppression bid in front of the New Zealand Institute of Chartered Accountants Appeal Committee this morning. The disciplinary tribunal of the NZICA had censured the accountant in 2019 after he pleaded guilty in November 2018 to charges of negligence and incompetence. He's since ended his career in auditing. However, his name suppression has continued and he sought permanent name suppression. Overall confidence in the construction sector has leapt substantially from a year ago, but confidence in the ability to find skilled workers to staff the industry have fallen dramatically, according to a survey out today. The 2021 Construction Industry Survey, conducted by industry software provider Teletrack, Navman and Civil Contractors New Zealand, found 90% of 161 largely senior managers and business owners of civil construction firms would hire more staff immediately if they could, up from almost 70% a year ago. Joining NBR co-editor Fiona Rotherham was Civil Contractors New Zealand CEO Peter Silcock.
It's interesting, the Teletrack Navman survey, it does also tell us that people do have quite good resources on site to train. But as we try and scale up the numbers we're bringing into the industry, I think that will be a major challenge.
Civil Contractors New Zealand CEO Peter Silcock speaking to Fiona Rotherham there. Those are our top stories as we head into the weekend, the full versions of which, along with all our daily breaking news, columns and opinion, are at nbr.co.nz right now. You're watching NBR This Week, a brief look back at the week's top stories from our daily news brief program, NBR Today. On Monday, soaring performance fees drive big net profit gain for MILFORD funds. Soaring performance fees for the year to March have helped drive a 70% net profit gain for fund manager MILFORD Funds. Financial statements filed to the company's office show the firm booked performance fees for the year of $68.2 million, up from $21.2 million a year earlier. Asset management fees also gained, rising 27% to $93.4 million. Total revenue was $162.7 million, generating a net profit of $11.7 million, up from $6.9 million the previous year. The reporting period covers much of the market's recovery after the deep plunge driven by COVID-19, which reached its NZX nadir on March 23rd last year. MILFORD Funds is the manager of 21 retail and wholesale funds, including the MILFORD Active Growth Fund and the MILFORD AON KiwiSaver Active Growth Fund. It's NBR This Week, the week's top stories from our daily video business news bulletin, NBR Today. From Tuesday, investment handled by the government's Inward Investment and Exporting Agency at highest ever level. Investment handled by the government's Inward Investment and Exporting Agency, New Zealand Trade and Enterprise, was at its highest ever in the 2020-2021 financial year at $1.36 billion, despite COVID-19 disruptions. That compares with just $772 million in the year prior, though that involved more deals, 94 compared with just 73 this year. The figures cover investment into growth companies, greenfield developments and mergers and acquisitions. The potential direct economic impact, which is the forecast return to the country from increased profits, wages and supplier spend, rose to $3.39 billion compared with $2.6 billion last year, $2.5 billion in the 2018-19 year and $2.3 billion in the 2017-2018 year. This is NBR This Week, the past week's top 5 business stories from NBR Today. From Wednesday, an asset bubble and a yearn for yield proves fertile ground. The combination of the asset bubble and a yearn for yield has proven fertile ground for a class of offers syndicating everything from Christchurch townhouses to Gisborne apple orchards and has the FMA on watch. Bank term deposit rates of 1% can't hold a candle to offers such as infill housing developer Williams Corporation's Capital Partnership LP offering a 10% annual return on a minimum investment of $100,000. Or My Farm's Te Arai Orchard Limited Partnership, an investment in a 28-hectare rocket apple block with forecast returns of 25 to 30% at maturity. My Farm's Chief Executive Andrew Waters joined the NBR's Maria Slade.
So last year we offered around 13 or 14 individual syndicate investments. 70% of the money for those investments was repeat investments. So people that have invested with us previously. So yeah, it's a specialist product for wholesale or more experienced investors, wealthy investors looking for exposure to the horticultural sector in New Zealand.
My Farm Chief Executive Andrew Waters speaking to Maria Slade there. It's NBR This Week, the top business stories from our daily video news bulletin, NBR Today. From Thursday, competition in the grocery sector was not working well for consumers. The creation of a major grocery retailer that would interrupt the largely unbothered duopoly that currently runs the country's retail grocery sector is one option made in a report released by the Commerce Commission this morning. The Commission's draft report found competition in the $22 billion a year grocery sector was not working well for consumers and the market needs new entrants. Another possibility would be to vertically separate the two major grocery retailers by requiring them to structurally separate their wholesale business from their retail business, similar to electricity market reforms. Other suggestions in this morning's draft report, based on its market study, also revolved around a great deal more legislation and official oversight of the sector. This is NBR This Week. Now we're up to Friday's top story. MAINFREIGHT Managing Director Don Braid reckons rules dictating director tenure are just bloody stupid. And judging by the audience response at yesterday's company AGM at Eden Park, plenty of shareholders agree with him. In a 20-minute presentation to a packed room, Braid covered plenty of ground, including giving a positive trading update for the company's past 17 weeks. Revenue between April 1st and July 25th was up 41% to $1.6 billion compared with the same period a year ago. Profit before tax was up 97% based on the same time period comparison. Investors who spoke later at the meeting seemed satisfied with the company's performance, specifically the share price development, which closed at $83 yesterday. You've been watching our review of the week's top 5 NBR Today stories. You can find the full versions of those stories and more with all our daily breaking news, columns and opinion at nbr.co.nz right now. Saturday at NBR, in fact or fiction, Grant Walker and Brent Edwards chew the fat on the supermarket duopoly and more, while on Sunday Brent Schieffer gives his take on Community Trust's investment performance. I'm Paul Brennan. Thanks for watching NBR This Week. Have a great weekend. I look forward to being with you again from Monday on NBR Today.